Hello and welcome to CNBC Africa's special coverage of the World Pension Summit, Africa Special, holding at the Transcorp Hilton Hotel in Abuja, Nigeria's Federal Capital Territory. The theme for this year's two-day event is Building Sustainable Pension Systems in Africa. I'm Esther Awuni. Thank you for joining me. Pension systems in Africa have evolved over the years, with more people than ever now saving for retirement through a variety of pension schemes. There are also emerging investment opportunities for pension managers. The first panel discussion at this year's World Pension Summit's panel discussion is about reforms and developments in African pension systems.
Let me say yes, and this is evidenced by the fact that we have already rolled out the principles of investment that are already operational, and by this I mean that the principles provide minimum requirements based on which each partner state would actually develop their own regulations and guidelines. So the main objective behind this was to make sure that, to ensure that once we start going through all these developments, once we start going on taxation, portability, etc., we'll not get into a place where you cannot move because in this specific country, the legislation does not allow this. So yes, we have common principles, and one of them that is already operational is investment. The other one is informal sector. So, and all these principles have been developed based on the studies, based on the gaps that have been identified in each member country and discussed in our quarterly formal meetings. So the principles are developed and they are all incorporated in the respective legislations or regulations of each member country. And the other one is the portability that is now being worked on, and also the governance. And that's why you have seen that 2 countries out of 5 have already developed their governance guidelines based on the coordination that is going at the regional level.
The coordination aspect is being driven by the East African Community Protocol, which envisages that labor, capital, and factors of production will be moving across borders. Pension could only follow suit. It cannot lag behind to allow what follows, allow benefits of labor follow them wherever they are, so that they can enjoy their benefits whether they worked in Kenya and retired in Burundi, worked in Burundi and retired in Tanzania, so that it eases portability issues. In terms of technology, I think it's in Kenya where we have now relied on technology in order to grow pension coverage, particularly to the informal sector, so that we are able to tap informal sector workers. The reason why we are relying on technology is that we have been able to address challenges of income irregularities, which is common in the informal sector. We have been able also to address challenges with low incomes, which other pension schemes find difficult to mobilize. And we have also been able to address the challenge of labor being highly mobile in the informal sector. In other words, today you find a person selling groceries, tomorrow he's roasting maize, and the next day he's in the ocean or in the lake fishing, so that they're able to contribute towards their retirement wherever they are, any time of the day or night, as long as the network coverage reaches there.
Take Ghana as an example. The National Pensions Act, which is the guiding legislation, is quite specific as to the kind of investment instruments pension funds are allowed to invest in. It states government securities, bank securities, equities, collective investment schemes, and the like. What the regulator has done is to come out with some clear investment guidelines as to the assets allocation amongst these various investment instruments. For instance, you cannot invest more than 75% of the assets in government securities. You cannot invest more than 30% of the assets in money market instruments. You cannot invest more than 10% in equities. You cannot invest more than 5% in collective investment schemes, and so on. Now, the regulator, when we receive reports from the private pension funds, we just look at these things to be sure that you have not exceeded the maximum limits. What appears to be rather a bit strict is offshore investments. Now, the law, for instance, in Ghana does not prevent offshore investments, but the restrictions are quite tough. Now, if any private pension fund so wants to invest in any of the pension funds offshore, you have to apply to the regulator, and if the regulator is convinced, the regulator makes a recommendation to the Minister for Finance. If he also gets convinced, then he makes a recommendation to the President of the Republic.
Another key highlight at the summit is a discussion about pension funds financing infrastructure. At this panel discussion tagged Structuring Pension Investments for Sustainability, the Infrastructure Bank of Nigeria CEO lists reasons why pension funds should invest in viable infrastructure projects.
The reality is that today, and I think Kunle spoke about it beautifully, the only real financing that has been there sustainably has been the development finance institutions, okay? And it's been a very, let me call it, American-style project financing type approach, right? Which spends a huge amount of time and effort spinning us wheels in the sand around the legals. And the bottom line is that it has several problems. The first problem is time, right? Is that it's taking an average of 7 years to just close the financing of some of these projects.
Most of the time, when investors look at a project, they would basically run their financial model, look at the IRR, and make an investment decision, right? And when they do so, basically, obviously, you were talking about 7 years before things start. Things start late. There's no local content, no real capacity, etc. And suddenly, they ultimately realize that the IRR that we're targeting actually did not materialize. And one main issue related to that is that no one actually thinks ecosystem, because all the key ingredients that make a project work are local capacity, content, distribution chains, actually even housing, health, etc., that are the key drivers to the success of a project.
I guess that's why Chinelu was putting me in front of all of you here. I went to her. I said, Chinelu, you are the one managing this pocket. That pot is too big, 5 trillion. And it's not anywhere but in treasury bills. We will all die. So she said, Kule, you have a fantastic idea. And now, I gave my friend synopsis. We've talked about so many things. Let me tell you, if you guys, it's in our collective enlightened self-interest to find a solution to the seemingly risky environment. Because the riskier, the return. Now, I'm building a 37-kilometer metro rail in Lagos. And they said the capex is huge. I said the population is also huge.
Participants at this next session take the conversation further by discussing expanding investment frontiers for pension funds.
What I will say is that infrastructure is relative. I learned that yesterday you talked of soft and hard, and in many respects, and when we're looking at expanding investment frontiers, my feeling is that we ought to be looking at certain things that will benefit the very people that are actually doing the contributing. So I'm particularly concerned about things like health, and I take that very personally. I'm aware of the problems in this country with, for instance, kidney failure. And I don't understand how we can spend so much money in other countries, and it's almost at epidemic levels here, and we don't have anything, we're not addressing the problem for ourselves this end. So I think that, when you consider that people have saved for their pensions, and they've saved for a good life as pensioners, and I ask, well, what are we doing? Why can't the pension funds address some of their energy in terms of what they invest in that will benefit the very people that have provided those funds in the first place? So that would be my first observation. My second observation, coming from my involvement with a farm at the moment, is I look at the issue of food security, and I ask, well, why can't we address that area in terms of the way funds are deployed?
Whose assets are this anyway? Does it belong to the government? Does it belong to the pensioners? So, if it belongs to the pensioners, what's important to them? Is it just the money sitting in Woodset too, and they don't have any house, there's no infrastructure, there's no hospital, I mean, that's what I'm thinking from the last panel to this panel, where, hey, wait a minute, the fear of, we have to make returns. But, like Oscar rightly pointed out, pension funds must have an impact beyond the rate of return. You're making money, but it must have an impact. And, we've seen, like the Mexican example, that pension funds can be tools for economic development. I mean, you can, and what are we looking at? Job creation, improvement in public infrastructure, affordable housing, plus the return. All this can be achieved by investing pension fund assets.
I think the starting point, and I must declare up front, I'm not a pension specialist, but I have worked in infrastructure as a developer and investor for the last 30, 35 years. So I can speak with some confidence in that sector. What you need to look at in terms of making investments is where appropriately in the project life cycle would you be willing to, and at what stage would you be willing to invest? So is it at the feasibility stage? Is it at the construction stage? Is it at the operation stage?
In the last 6 years, pension experts have been meeting in Holland for the World Pension Summit. This is the second time Nigeria hosts the World Pension Summit, Africa Special, and the Director General of Nigeria's National Pensions Commission, Chinelo Anohu Amazu, would like to see the World Pension Summit hosted in other African countries.
We're also trying to foster this across the continent to ensure that people are constantly thinking of their pension systems and how sustainable is it and how best to leverage it for their internal developmental needs. And across the next 2 days, we're going to discuss very pertinent issues to this objective, and it will have to do with what kind of systems are you running, be it a defined contribution or a defined benefit, how effective are your systems across the globe. We will have the regional reports as the main plenary for this summit, and where people from all the regions in Africa will give a report on what they took away from last year's summit and what they're expecting with this year's summit, because that helps us to form a nexus between what happened last year, what will happen this year, and what we hope for the next year coming. Pension has to have come on the front burner with the increased paucity of finances available to governments worldwide, not just on the continent. And so we are trying to sort of formulate policies that will assist in making sure that the pension systems are effective and sustainable in the nearest future.
On the sidelines of the summit, delegates share their thoughts on this year's agenda topics as well as key takeaways.
If you look at our history in Nigeria regarding pensions, we've made remarkable progress. We've come from a system where pensions just did not really work in Nigeria. People were not collecting their pensions as at when, and very often pension funds would disappear. There was no accountability, no responsibility. So we've made a lot of strides in Nigeria. The system we have now works.
We need to create continually awareness of the need to increase the number of people within that contributory pension scheme. If you take a classical economics says that you increase your level of savings, you will be able to increase your level of investment in the country. And if you increase your level of investment, then you can increase the growth of GDP because there will be growth. Now, for that reason, if you take, for instance, Nigeria, we have 170 million, people, with about 60% of that in very active life. So it means that the working populace is actually maybe about 60, 70 million maybe. Then as of today, PENCON has only been able to capture only 6.5 million people. And that 6.5 million people have contributed about 5 trillion. Imagine if we increase that to about 30 million and see what will happen to our quantum of savings, which is very, very important for major key investment in Nigeria, particularly in infrastructure. So this kind of forum will give you the enlightenment and the awareness of the need to get as many people into that box.
What was interesting was the group of people who were in the room, experts from across the globe, some regulators, people who ran pension funds, people who advise on pension funds, commissioners, etc. So what was good was that the topics were discussed with people looking at them from different angles. So what I took away really was the scale of the opportunity. What one heard was that the amount of pension funds under management across Africa is around 400 million, but dominated by South Africa. Nigeria's pension fund has already seen phenomenal growth over the last decade to around 5 trillion naira. So the scale of the funds, but the fact that the funds are dominated by 1 or 2 countries. But more importantly, what was really interesting was to talk about how these funds can be put to use. Maybe the key issue for me really over the 2 days was the whole issue about pension fund assets being put into infrastructure.
Pension funds are going to be important. The population in Africa is expected to grow. Nigeria is probably going to be about 450 million people by 2050. So it's a pool of people. It could be a pool of money that could be invested into a real economy. So I think it's really good to start talking about it right now. I can tell you that we have begun discussing with PENCOM, and we hope to really show you some results very quickly. The PENCOM director has been very vocal, energetic in trying to come up with solutions, and I appreciate that. So we're really trying to work with her, discussing housing, discussing agriculture, discussing power. So very hopefully in the next few months, we should be able to come up with some results.
The Nigerian scenario is quite good. From a deficit of about 2 trillion in 2000, we have over 5 trillion naira in pension assets. So given the current global trend towards moving investments from bonds and stocks into social infrastructure, I think one of the key things today most delegates agreed upon was that pension fund administrators should actually look towards investing in infrastructure that would impact on the social lives of citizens, so that way contributors who contribute money would not wait till the end of their retirement working life to earn the benefit. When you invest their money in infrastructure, they can actually benefit while still working from the proceeds of their contribution. And one good thing was that the National Pension Commission has set out guidelines that would allow contributors who have funds in their retirement savings accounts to use part of their contributions towards depositing for their primary homes. That is, they can use that to securitize a mortgage. So I think looking at the global picture, today was quite good. We agreed on enlarging the scope of the contributors to actually bring in workers in the informal sector.
We'll take a short break, and when we come back, we'll continue our special coverage of the World Pension Summit Africa Special. Join us again. Welcome back. Expanding the investment frontiers of pension funds in Africa while also addressing some of their challenges were some of the issues discussed at this year's summit. Day 2 of the summit features more panel discussions and debates among pension experts. In one of the breakaway sessions, Muibat Ijaya, partner at Strategy Management UK, makes a case for technology in service delivery.
So I can start to think of some segments in the pension industry where technology-led service delivery might be an option. The other end of it is it reduces uncertainty and it increases efficiency and speed, as I said, and it does eliminate that human discretion to say, oh, I'm going to get it to you today or tomorrow. It's standardized. You know what you're going to get. And the customer's expectation is managed. The second one is human-led. Now, human-led service delivery model is where you really need to have high contact with the customers, right? And you can think of an industry like mine, consultancy. If we have to deliver our services through technology, it's not going to work, right? Because it's an intangible product, it's intellectual, we need to connect with the customers, and each solution is slightly different. So you can see that at the other extreme. Now, the discretion of the employees, same thing with advisory services, is extremely high because it comes down to that kind of intellectual power. It's inconsistent. That's some of the downside. It's inconsistent. It really depends on the relationship you build. It depends on the skill set of those employees. And it's a very costly model to actually run for, if your target audience is very large, right? If you're looking at, for instance, the informal sector, and you go with a human-led approach, it will be very costly.
After 2 days of discussions and debates around the growth of pensions in Africa, delegates are treated to an evening of entertainment. Pension experts agree that pension schemes need the right policy environment to thrive. 3 Nigerian state governors share their experiences on the development of pensions within their respective states.
When we got sworn in May this year, we inherited a pensions and gratuity deficit of 14.3 billion unfunded. We're still grappling on how to resolve that. But we also inherited a partly funded defined contribution scheme that has some 4 billion naira. What we have done with the guidance of PENCOM is to draft a new pensions reform law in the state that will go before the State Assembly tomorrow. Actually, the State Executive Council approved it just yesterday. That will strengthen the pension regime in Kaduna State to be consistent with the provisions of the Pensions Reforms Act of 2014.
I agree, the cost of capital in Nigeria is high, but the returns is also quite high. There are some of the foreign investment in this country, even in financial services, that average return every year is more than 25%. So let's put the cost of capital at 15 and 25. It doesn't actually encourage these people to look beyond the money market. So I believe a few things. Number one, even in terms of road infrastructure, that is actually not a push. There are some economic viable roads all over this country that people are willing to pay to actually plow on good roads, because it saves the cost of actually maintaining your vehicles. You do a cost-benefit analysis. You see that if some of these ones are actually put in there, we can actually easily recover it as well. So a whole lot of infrastructure in this country needs long-term funding. And anywhere in the world, pension money is always at hand because it's like a pool of risk. There's no how you need the entire cash outflow overnight.
A key highlight of the evening is the awards ceremony. The Director General of Nigeria's Pensions Commission, Chinelo Anohu Amazu, was the first to receive an accolade.
For this wonderful person's leadership. Thank you very much. Thank you.
The late Philip Shimi, former CEO of Namibia's Financial Security Agency, is also honored posthumously for his contribution to the development of Namibia's pensions. The evening ends on a lighter note with more entertainment and networking amongst guests. That's a wrap on this special coverage of the World Pension Summit Africa Special. I'm Esther Awuni. Thank you for watching.